Hi, this is Bill Paulos from Profits Run, and this is my simple formula for making 12 times more return on your trades with 92.5% less risk compared to how most people trade. I'll show you how it works and how you can copy it in just a minute. But first, let me ask you a question. Have you ever lost a penny before? How'd it feel? Were you upset by it? Well, if you're like most people, you probably didn't even give it a second thought. After all, it was just a penny. Now, I'm not advocating throwing money away, but why isn't it a big deal when you lose a penny? Well, because it's almost zero risk to you. It's a penny, not a lot of money, right? Now, have you ever had a big losing trade before? One that really stung? Well, of course you have. We all have. And how did that feel? Were you upset by it? Well, if you're like most people, it probably caused a bit of anxiety. Maybe even a lot. Maybe it caused you to second guess your trading strategy, or maybe you even considered giving up trading altogether. Maybe it made you wonder how anyone could possibly make money trading the markets. And maybe it was even a little embarrassing, especially if you had to tell your spouse. Hey, I understand. We've all been there before. But why did a big losing trade stir up so many emotions like this for you when losing a penny had almost no effect on your emotions at all? In most cases, it's because you had way too much money at risk relative to the amount of potential reward in the trade. Everyone knows that even the world's best traders regularly have losing trades, right? So then one of the keys to potential success lies in knowing how to handle those losing trades. But what if there was a way to trade where the losing trades became almost insignificant compared to the huge upside profit potential of the winning trades? Imagine how it would feel if when you lost a trade, it kind of felt like just losing a penny. Imagine how much confidence it would give you, knowing that your account is protected at all times so that you're able to weather the occasional losing trades, even several in a row, to stay in the game and be able to pull as much profit potential out of the winners as possible. And imagine being able to have the potential to forever walk away from account-crippling equity curves like this, and instead be able to enjoy life-changing equity curves like this. Even if you're brand new to trading, and even if you think you've already tried everything and still can't get ahead, and even if you don't have a lot of time or even a lot of money. Now, it's important that you see what's going on here. This is not a perfect equity curve that always goes up. That just doesn't exist. But this is a realistic equity curve with a few minor speed bumps, as you can see here. That's real life, and you have to be prepared for that. That's why I'm not going to sugarcoat anything, but I think you'd agree that just about everyone would be happy with an equity curve like this, right? Well, that's what I'm going to show you how to go after in these training videos. Let me explain. You see, when it comes to investing or trading the markets, you're constantly trying to find the right balance of risk versus reward. Here's what the balance looks like for most people. They risk an awful lot of money, just way too much, for a relatively tiny reward. Sure, you can win a few trades like this, but eventually your portfolio is going to get wiped out. The odds and the math pretty much guarantee that. And this is one of the big reasons most people lose in the markets. They risk way too much for very little reward. There's just no way you would have the confidence to keep trading with this kind of approach, and you'd give up. But imagine if there was a way to tip the scales and turn this around, where the reward overwhelmingly outweighed the risk. Now, this is more like it. Sure, you'll still have losing trades in this scenario, but because the risk is so small relative to the potential reward, you can come back to trade again and again because account-crippling losses are all but impossible. When you trade with a risk-reward ratio that looks more like this, the odds of success are overwhelmingly in your favor. So in these training videos, I'm going to show you a simple and safe way to make 12 times more return on your trades with 92.5% less risk compared to how most people trade. Now, that's not hype. In just a minute, I'm going to show you the math to prove it. And I'm also going to show you how to use this math to earn up to 5% of your total account per month, or up to 60% per year. That's the realistic goal. But how is this possible? After all, we've been led to believe that big rewards require big risks, right? Wrong. You see, there's a common options trading strategy that you can use to actually reduce your risk each time you trade. But you need to apply it in an uncommon way. It's possible when you apply an unusual 180-degree shift to how most people attempt to use just one specific options trading strategy. You see, most people unintentionally sabotage their success when attempting to use this strategy because of a huge, fatal mistake they make again and again. I'll reveal what it is a little later. And it's this mistake that caused me to discover a very precise, step-by-step formula that gives you the potential to risk less and earn more than you probably ever thought was possible. I'm going to teach you my formula in these training videos so that you can try it out for yourself. If you're brand new to options, don't worry. And if you've struggled with options in the past, don't worry. That's because I'm going to show you my Options Income Engine Trade Alert software that automates the most time-consuming parts of my formula, and it'll kind of give you an unfair advantage over everybody else who trades this way. It's not a trading robot because you're still 100% in control of making your trades. It's more like a personal trading assistant that works for you behind the scenes and taps you on the shoulder when it's time to trade. I named it the Options Income Engine because it really does feel like an engine that quietly runs in the background, cranking out trading opportunities that'll have the potential to create a nice income stream. And while it's working 24 hours a day for you, your actual time commitment is about 10 minutes or less per day. That's it. Now, use of the software is entirely optional. I'm going to teach you how to manually apply some of the concepts that the software automates for you. Then you can decide if you want to use the software or if you want to just apply my formula yourself. Sound good? Okay, so put your wallet away, sit back, and relax. Now, while the information you're about to learn is very easy to understand, it's important that you actively watch these training videos and take notes. So close the door, silence your phone, shut down your email, and watch these videos with an active mind. By the time you're done with just this first video, I think you're going to be very excited by this approach, and you'll probably want to start using it right away. So are you ready to begin? Okay, let's get started. So if you ask most people if they trade options, you'll likely get a response like this. Most traders are still kind of in the dark and confused about trading options. Well, here's one of the main reasons for that confusion. You see, when it comes to options trading, there's a huge amount of terms, ideas, and strategies that you can study. It's like learning a whole new language, and it can be overwhelming. Most people think they need to learn all this stuff, and that's one of the reasons most people lose trading options or avoid options completely. But the reality is you don't need to learn all these different terms, or even be aware of them for that matter, to potentially be very successful trading options. Why? Well, because with my Options Income Engine approach, we focus on just one strategy, buying calls and puts. That's it. After trading the markets for 40 years, I've found that simple is always better. Every time. In fact, that's what one of the greatest minds of the 20th century said, too. It was Albert Einstein who said everything should be made as simple as possible, but not simpler. Now, I don't know if Einstein was a trader, but he was a genius. We all know that. And the genius in this quote is that it describes exactly how I've helped over 50,000 regular people from all over the world to become better traders since 2001. I teach them to never overcomplicate things because when things become too complicated, you tend to make more mistakes. So if you've never traded options before, I guarantee that these videos will be the clearest and easiest to understand explanation of options trading that you've ever seen. And if you're already familiar with options, I guarantee that the approach I'm about to show you, combined with my Options Income Engine Trade Alert software, will be the easiest way you've ever seen to trade options. But before we get into too much detail, I want to speak to the beginners for a second because I want you to be comfortable. If you're totally brand new to options or just need some clarification on what call and put options are, then I have a special bonus video for you that you can watch after this video. It's called Call Options and Put Options Explained Simply in 8 minutes. This is one of my most popular training videos of all time, and my students tell me it's the clearest explanation of call and put options that they've ever seen. So I really think you're going to enjoy it. There should be a link on this page that'll let you watch it. Don't do it right now, but go ahead and watch it after you're done with this video, okay? And if you are brand new to options, just understand this. We want to buy a call option if we think the market's going to go up, and we want to buy a put option if we think the market's going to go down. We can make money either way. So a real easy way to remember this is by picturing a telephone. When you use a phone, you call up someone. So remember that when a market's going up, you use a call option. And when you're done using the telephone, you put it down. So remember that when a market's going down, you use a put option. Make sense? Okay, and for you options experts, don't worry, I'm going to be diving into a lot of detail in these videos. I just wanted to get this simple explanation out of the way for the beginners. So why even consider options? What's wrong with just directly buying and selling stocks or ETFs? Well, nothing's wrong with that as long as you don't mind missing out on some huge profit potential and as long as you don't mind taking on unnecessary risk. Let me show you what I mean through an example. This is Susie and this is Sammy. And both Susie and Sammy want to make a nice return on their money trading this stock. Let's call it XYZ. The actual name doesn't matter. Now, both Susie and Sammy each have a $15,000 account to trade with. But they're each going to take a different approach to trading the same stock. Susie's going to trade the stock directly, but Sammy is going to trade the option instead. In both cases, they're going to be entering and exiting the trade at the exact same spots. And they're both going to be controlling 100 shares of the stock. So we can make an even comparison between their two approaches. Okay, let's see what happens. So on this day right here, the market opens higher at $40. And this is where Susie and Sammy are going to enter this trade. And don't worry about the method they're using at this point. We'll get into that later. Okay, so Susie buys 100 shares of the stock directly for $40 a share or $4,000. Now, a couple of things to be aware of. First, about 27% of Susie's account is now at risk because she owns these shares outright. If the market were to crash the next day, she could watch over a quarter of her account get decimated, even if she uses a stop loss order because the market could gap down the next day, blowing through her stop. So she has $4,000 at risk, and that's the most she can lose. But this is what she has to do to control 100 shares of this stock, buying it directly. Okay, now let's look at Sammy. Instead of buying the stock directly, he's going to buy just one call option, which controls 100 shares of the stock. More specifically, he's going to buy what's known as a 38 strike call option, $38 being the strike price of the option. And if you're new to options, don't worry about understanding all the details yet. Just focus on the end result of this example. So the cost of Sammy to buy this one call option is $3 per share, or just $300. Now that means Sammy has $300 at risk. That's the most he can lose under any circumstance. So Sammy has to risk only 2% of his total $15,000 account on his trade, whereas Susie has to risk a whopping 27% of her account in order to control the same number of shares. Make sense so far? Okay, so over the next several days, this market continues to move upward and it quickly hits Susie and Sammy's profit target of $45. This is the predetermined price they were shooting for, so they're both very happy, of course. Susie sells her 100 shares for $4,500, making a net profit of $500. Not bad. Sammy, on the other hand, sells his call option for $7.50 per share. That's its value when the stock is at $45. So Sammy collects $750 for a net profit of $450. Now, if you just look at the net profit as a dollar amount, then Susie did better than Sammy by $50. However, Susie's net gain as a percentage of how much he had to risk was 12.5%, or her $500 profit divided by the $4,000 she had at risk. But not bad. I think most people would be happy making 12.5% gain over a few days, right? Well, let's look at how Sammy did. Sammy's net gain as a percentage of how much he had to risk was an astounding 150%, or his $450 profit divided by the $300 he had at risk. Wow! Let that sink in for a moment. This is why trading options is so powerful. And if you think 150% gain is unusual, it's not. Sure, you'll have losing trades, but a 3-digit percent gain trading options is indeed typical. So let's look at these numbers in a little more detail so you can see how much of a big deal this really is. Because Susie needs to risk $4,000 and Sammy only needs to risk $300, Sammy has 92.5% less dollars at risk. And because Susie's gain was only 12.5% and Sammy's was a whopping 150%, Sammy made 12 times more on a percentage basis than Susie did. So in this example, by trading the option instead of the stock, you would have enjoyed 92.5% less risk for 12 times the profit potential. That's awesome. And that's why once you trade options, you'll probably never trade a stock directly again. Here's another way to look at it. Stocks are higher risk and give you lower percentage return on your money compared to options, which are indeed much less risky while giving you a much higher percent return on your money. So the good news is that after you're done with these training videos, you'll be well on your way from moving from this quadrant to this quadrant, where some of the safest and best profit potential lies. This technique also gives you a lot of flexibility because it can work with IRAs in addition to regular brokerage accounts. Even if your IRA broker has told you in the past that you can't trade options, they may have been lying to you because they don't like the hassle of the extra paperwork required. But we'll show you exactly how to get around this so that you can easily use this technique to accelerate the profit potential in your IRA. And as you'll soon see, this could quite possibly be the safest and most lucrative way to leverage your IRA as well as your traditional brokerage accounts. It'll all make perfect sense by the time you're done watching this video, but first let me show you some actual trade examples using my Options Income Engine approach so you can see the tremendous amount of profit potential that's available. A little later, I'm going to teach you my profit screener technique, which is one of the ways I use to find the safest and highest potential stocks and ETFs to trade with my Options Income Engine approach. But don't worry about the actual strategy being used right now. Just focus on the huge amount of profit potential that can be generated. We'll revisit more trades like this in more detail in one of the future videos. These example trades are going to be done with what's known as directional swing trading using 1 or 2 strike in the money monthly call and put options. Now that probably sounds like a mouthful if you're new to options, so just focus on the trade results for now. Now with the Options Income Engine, we teach how to scale out of these trades profitably in 2 steps. Here's a chart of BBRY where we had 2 trading opportunities with call options. The first trade had a gain of 81.8% on the first half position and 363.6% on the second half. The second trade had a gain of 160% on the first half and 324% on the second half. And don't forget, I'm going to dive into a lot more detail on these trades in the next video. Here's a chart of SLV where we had 1 trade using puts, where we had a gain of 54.5% on the first half position and 141% gain on the second half position. Here's a chart of BAC using my put option where we had 1 trade that resulted in a 29.6% loss. Now this is one loss amongst several winners, and while 29.6% sounds like a big number, following our risk management principles, on this particular trade you're losing less than 1% of your account size. You could say it's kind of like losing a penny. Maybe the best thing of all on any of these trades, you can never lose more than the small debit you paid for the option. And here's a chart of CLF where we're using a call option for 1 trade where we had a 212.5% gain on the first half position and an 87.5% gain on the second half position. And a chart of Netflix NFLX where we had 2 call option trades. The first trade resulted in 185.7% gain on the first half position and 94.3% gain on the second half position. In the second trade result, 340.2% gain on the first half position and 332.8% gain on the second half position. I think you'll agree that those are some awesome trades. And because you have the opportunity to spot trades like this every day, monthly options offer significantly more profit potential than many other kinds of trading. It's just an amazing way to trade, and I can't wait for you to experience it. And because you place your trades in the evening after the market closes, you don't have the stress of day trading where you need to watch your positions throughout the day. You basically spend a few minutes after the markets close or before they open the following day and enter your orders. That's it. That gives you the rest of your day to do whatever you want. It really is that simple. Now, the other thing about monthly options is that there are plenty of high-volume stocks and ETFs that are not only optionable, but that also have a ton of liquidity, which makes it easy to get your orders filled. This graph shows the average daily volume for monthly options according to the Options Clearing Corporation. So as you can see, lots of people are trading monthly options. Now, trading monthly options is obviously not a new concept. However, you need to do it with very precise, low-risk points in the market in order to create a high probability approach to generating consistent profit potential month after month. And that's exactly what I'm going to show you how to do. I've spent thousands of dollars and thousands of hours studying options trading over the past 4 decades, And from everything I've tried and tested, my options income engine technique is the safest and easiest way to trade monthly options with strictly limited risk. Okay, so the first step of my options income engine approach is to choose the best stocks and ETFs that look like they're about to move big time, either up or down, out of the thousands available each day. I call this the profit screener technique, and it's something you'll be able to copy and put to use immediately. This is one of the techniques my options income engine TradeAlert software automatically applies to help spot the safest trades that hold the most profit potential. So at a high level, the basic idea is to start with the universe of all stocks and ETFs, then quickly narrow it down to put the odds in your favor, even before you ever place a trade. Let me show you how to do it. So here we're looking at a very good charting software package called TC2000. And what I'm going to show you, you'll be able to do with any good charting software. So in order to do the profit screener technique, we click on Easy Scans and create new Easy Scan. And then I want to select the universe of stocks that I want to scan. So in this case, I'm going to do all US stocks and scan. And you can see there are 6,157 stocks to choose from. And then let's go back and now scan the ETFs. And we'll scan, and you can see there's 1,648 ETFs. So that's a lot to choose from, right? You can't trade them all, so why not trade the best? Well, here's how we do that. So let's go back and start with stocks first. And let's add a condition. First one we're going to pick is optionable stocks. Okay, let's add another one. Now we're going to pick price. And here I want the price to be greater than $10. Trading options on stocks at a price of less than $10 is generally not that profitable. Okay, let's add another condition. Okay, we want the average daily volume to be greater than 1 million shares. All right, let's add another one. Beta. We want beta to be greater than 1.3. Beta is a measure of how any particular stock or ETF moves in terms of volatility relative to the general market. So we want stocks and ETFs that move, giving us profit opportunity. Okay, now let's run the scan. Remember, we had over 6,000 stocks. Okay, the list is now down to 353. These are the stocks that we want to focus on. Okay, let's now do the ETFs. Recall we had about 1,600 ETFs to choose from. Applying the same screening criteria, we end up with just 27 ETFs out of the 1,600, and that is plenty. Those are the best of the best. It gives us the highest profit opportunity with the lowest risk. So what you have here now is a relatively small list of the safest stocks and ETFs that have the most profit potential. And if you compare this list of about 380 stocks and ETFs to the total available of over 8,100 that we started with, you can see it's just about 5% of that list, which means that we automatically eliminated 95% of the riskiest and most dangerous markets. Now, this is something most people never even consider. So you already have an edge over most traders before you've even placed a trade. That's our first line of defense. And if you like that idea, I'm going to show you even more ways to reduce the risk further in the next video. So by now, I hope you're beginning to see why I'm so excited about this technique. There's just so much going on in your favor when you place these trades, especially compared to just trading the stocks or the ETFs. And if you're new to options, you might be a little confused or unclear about some of what I just taught you. If that's the case, don't worry. Go back and watch this video again and let it soak in. By the time you've seen all 3 of my training videos, plus the bonus video I just told you about, everything will make a lot more sense. So now that you've seen the first part of my Options Income Engine program, let me quickly introduce myself in case you're unfamiliar with me and my background. As I mentioned earlier, my name is Bill Polis, and I've been trading the market since 1974. It's my passion. It's what I love to do. I think I was attracted to trading in the first place because of my background as an industrial engineer, which is the field of study I got my first degree in. I learned how to create, test, and perfect systems. For many years, this is what I did in my automotive career. That was my day job. But my night job was trading the markets. After I got my MBA from the University of Michigan, I thought it might be fun to start a business one day to teach people what I knew about trading. Well, that dream finally came true for me in 2001 when I started my financial education company, Profits Run, with my son Greg. We literally started it from the kitchen table, and now, over 10 years later, we have a modest office and over a dozen full-time employees that have helped us train over 50,000 regular people from all around the world on how to become better, smarter, and more effective traders. From the beginning, my goal was to simplify trading so that almost anyone could have a real shot at potentially creating some extra income in the markets. And I think my teaching hits home with a lot of people, since so many of them keep coming back to us for more and more training. So I'm glad to have you here with me in these training videos, and I hope you pick up some useful techniques. So I'm almost done with this video. I hope you enjoyed it and found the idea of using my Options Income Engine approach appealing. But we're just getting started. So in the next video, I'm going to show you my Options Income Engine Trade Alert software in more detail so you can see how you can essentially get the best of the best options trades delivered to you every night after the market closes. But here's a little sneak peek. Every night after the market closes, my Options Income Engine software scans through the thousands of stocks to find the safest stocks and ETFs where the odds are in favor of a big move happening in the next few days, either up or down. Now, this is a list of the 400 or so that made the first cut. Still a huge list to wade through. So from this list, on any given night, it might find, say, 3 stocks like these: Google, Apple, and Facebook. But once you have the stocks, you need to know which option to buy. And if you've ever traded options before, you know this can be a daunting task because each day there are hundreds of different options to choose from for each stock or ETF. In this case, Google has over 800 call options. Apple has over 600, and Facebook has over 350. If you include the puts, it could be twice this number, and all of these change every day. So how do you know which one to choose? Well, that's what my Options Income Engine software does next. After it finds a good trade setup, it then automatically analyzes every possible option and then tells you precisely the best one that gives you the least risk with the most profit potential. So in this example, out of these huge lists of call options, it might pick out these specific options as the best ones to trade. As you can imagine, this is a huge time saver, and it finally removes all the mystery and confusion that typically surrounds options trading. I can't wait for you to experience it for yourself. And don't forget, because my Options Income Engine software is not a trading robot, you're still in control, and you can make all the final trading decisions so your account remains protected at all times. Now, even when you've identified a stock or ETF along with the best option to buy, you still need precise entry and exit rules to further limit risk and maximize profit potential to help put the odds of success heavily in your favor. That's why in the next video, you're going to learn more about one of the techniques my Options Income Engine Trade Alert software uses to help spot the safest trades that hold the most profit potential. I'll dig into the trade examples you saw earlier and show you exactly how you can safely lock in profit as quickly as possible. There's a simple formula you can copy. And I'm also going to reveal what I consider to be the #1 mistake that sabotages most options traders. Once you understand what it is, it'll be almost impossible for you to place a high-risk options trade again. The next video will be posted shortly. In the meantime, make sure you understand everything in this video and go ahead and post a comment below if you like what you've seen so far or if you have any questions. For now, this is Bill Paulos wishing you good trading.